It's another edition of the program Frontier of Bell. Thank you for joining us. I'm Temple Ashaju. Ali Seker joins us from Dubai. Personal Fire Executive Editor here at Frontier Africa Report. Thank you for coming in. Joshua Debisi from Pretax Capital Management. I appreciate your presence. Let's kick in with the markets and look at how the indices of each of the markets that we track settled yesterday. Nigeria was up 0.71%. The Maghrebia Stock Exchange based in Cote d'Ivoire was up 24 basis points. Egypt was down 1.19% on Monday to open the week negatively, while Kenya slumped by 3.12%. That's a really slow start to the week. And of course, Johannesburg Stock Exchange in South Africa was positive, 0.38%. We hope we'll get details of what led to the decline in the Nairobi Stock Exchange yesterday. The Eastern African headlines now, we've got the Kenyan Central Bank keeping policy rate unchanged at 7%, and I understand that's the seventh time that is happening. NSE full year 2020 profit after tax was up 190% to 167.9 million Kenyan shillings, despite the 5% revenue decline. And of course, the Nairobi bourse, who said earlier, was down sharply by 3.12% on negative bank earnings. One key reason there. You have the Vivo Energy in Rwanda buying Ines and Jamaica petroleum assets, something that is expected to give them a 3% market share eventually. Bosun, you're the ones who comes up with these headlines in the eastern part of Africa.
There's a quick one. You know, Temple, and it's a very interesting mixed story. The banks listed on the Nairobi Securities Exchange were reporting not very good numbers. From Equity Group to MCBA to Cooperative to ABSA Kenya to Standard Chartered in Kenya. And surprisingly, the stock exchange itself reported 109% profit after tax. Because the Nairobi Securities Exchange is a demutualized exchange, listed its own shares on its own, which was done completed about 3-4 years ago, I think less than 5 years ago, thereabout. And despite the fact that the banks were hurt and a few other companies were hurt because of COVID-19, it's only its revenue that declined very slightly because, of course, you don't have as much listings last year. Companies were trying to just get by because of the pandemic. But look at the net profit, 109%. That is huge for Nairobi Bourse, and it shows that, look at the story, the same story, similar story from the GSC in South Africa, the GSC Group Limited. They also reported fantastic numbers for 2020 reporting period as a listed exchange. Even the Dar es Salaam Stock Exchange, Temple, even the Dar es Salaam Stock Exchange, the DSC PLC, also reported. So I've seen 3 exchanges in Africa reporting good 2020 numbers as a stock exchange. But the companies, the story is sort of very different. Leaving the interest rate on change yesterday by the Kenya Central Bank, I think it's just what everyone expected. The output from Bloomberg was that many frontier Africa central banks will leave interest rate unchanged. Again, keep the accommodative, so much spending fast and furious last year, trying to see how the vaccine will work, see the impact on inflation and liquidity, a lot of other things from the stimulus that were all spent last year. It's only the US right now, I think, has the appetite to spend additional $2 trillion or so into the economy. And they also begin to think of, hold on a second, where is inflation coming through? What is the price of yield on assets? So even the US can spend so much more. They're also concerned about inflation level within the environment and what that happens. So right now, central banks are trying to manage things. All the stimulus last year, I think, wrote about 13-14 trillion, globally speaking. They have been funneled into the global economy and the markets. And so there's so much liquidity out there right now that there are a bit of concerns being raised by investors. I don't know. I think the Rwandans are looking for energy one way or the other. If they can lay their hands on oil, they wouldn't mind. So Vivo Energy is there doing business, and they're trying to see how they can get a bit of it. Whatever you think of it, energy is still important. Whatever type of energy we have, whether you have the dirty energy, which is crude oil, or you have the clean energy, which is gas, associated gas, hydrogen, whatever you get, just lay your hands on something and you can turn it around and make good use of it.
Thank you very much for those analysis, Bosun. Joshua Debisi, I know that you are the head of banking analyst at Pretax Capital Management. Given that we have banks reporting negative earnings in Kenya, any contributions on this?
Well, all I can say is that obviously their own tactics were vastly different from what we employed in Nigeria and how we chose to manage the situation looking from last year. Because a lot of banks, not just in Eastern Africa, but in Southern Africa as well, issued profit warnings. A lot of them took almost 100% provisions on their loans because they knew that the economy was going to be badly hit. Fortunately for us, in West Africa and Nigeria specifically, we saw a much more proactive approach. Very early on, we saw the banks go to the CBN to seek approval to restructure loans or to extend repayment periods, and this helped to keep NPLs low and to keep provisions low as well. Now, most recently, we've seen FCMB release fairly impressive results, even though the overall provisions went up year on year by about 62%. They were still able to to actually reduce NPLs year on year from 2019 3.7% to 3.3% in 2020, which is very impressive, and it has been the same case across a number of our banks that have released. I don't think any bank that has released so far has seen a decline in profit after tax year on year. So I think what I can say is probably there should have been a more proactive approach taken from the very beginning, especially in Eastern and Southern Africa, although maybe it would not have been the case in Southern Africa because, especially South Africa, because their own economy is vastly larger, and to restructure that number of loans would have been like restructuring the entire loan book of the Nigerian market probably. So it probably wouldn't have been so realistic. But I think there are still steps that should have been taken and could have been taken in the Eastern and Southern African markets to sort of mitigate these difficulties that they are seeing.
Thank you very much for these comments, Joshua. Appreciate them. Let's now move on to the Western African markets, where you have the OPEC and, of course, the JTC, JMNC, the joint meeting of ministerial executives to be happening on April the 1st, which is, I think, Thursday, the 6th, and, of course, the 7th. We'll be getting updates from those meetings. The Africa Free Trade Continental Area Agreement also will, that's the AfCFTA, signs an agreement with UNDP worth $3 billion to support and build support and promote one African market trade. The Securities and Exchange Commission of Nigeria also issues new rules on warehouse trading, collateral management, gas, PIB, passage, top agenda as Nigeria's annual petroleum summit. That's something that is ongoing, and of course, Ghana's total exports dipped by 9.2% year on year to $2.5 billion. When we talk about oil, we should be able to relate, or Ali should be able to relate these, and that's as it relates to OPEC and the joint ministerial meeting that is expected or coming on board shortly. Ali.
Yes, so the OPEC meeting is quite interesting, because we have seen a lot of volatility on the oil price recently. So it has gone up, it goes down, it goes up, it goes down. There is a lot of volatility due to some weaknesses, we can say, in the sector. First of all, we had recently the Canal Suez, we can say, issue in Egypt. So it damaged also the flow of the oil. We have Iran, of course, and we have Libya. And we have, we can say, the other aspects. So this is on the supply side. This is that, in fact. So this is Canal Suez, Libya, and Iran. On the, we can say, demand side, this is on the, we can say, on the economy. The recovery of China, US, and Europe. We had good signs from China, but relatively, we can say, moderate side from Europe, and moderate side also from US, in fact. So when you see all these kind of, we can say, aspect and volatility and uncertainty on the sector, it's quite normal to see that oil volatility is going up and down. OPEC summit is here, we can say, to stabilize the market first. But the OPEC, we can say, has lost a lot of its weight recently. We have big oil producers like US, Russia, and they don't really necessarily will cooperate with the OPEC. We have seen last year that they are willing to cooperate, but they don't have really the same, we can say, goals than OPEC. OPEC want to maximize and their we can say their profit and all this, and some other countries just want to sell their goods. Even in OPEC, you know, you have issues with Libya. Libya wants just to sell its oil. They don't really care about, we can say, the price market of the oil. They just want to sell as much as possible. Iran is on the same situation. Saudi is a little bit, we can say, and Saudi is the deal maker. So it's a little bit, we can say, on two sides. On one side, they want to maximize their profit, but on the other side, they don't want to sell the oil price, the oil at any cost, because they are counting a lot of on oil price to we can say to invest inside their country, because they have big projects in Saudi Arabia, so they need relatively high price, so around $60 to $70. So they don't really have the same, we can say, goals, and the OPEC meeting will be there to see and to, we can say, to assess what kind of policy OPEC want to realize, either a high price or a market share. We can say a market share, to take market share through to US and Russia.
Thank you very much, Ali, for these comments there. Joshua, let me come back to you now with the Securities and Exchange Commission's new rules on warehouse trading. I mean, how are you digesting that at Festival Capital?
Well, we're still looking into them. So really, at this moment, I am not able to fully give, complete color to these new rules. But I think as time goes on, we will definitely have a fuller, more complete view on that. What I can say is that the SEC's efforts towards sort of opening up the market and being able to encompass or to cover all the new angles of the new investments or the new regulations are really going to help the market in the long term. Now, obviously, there are a few issues that need to be sorted out with regards to one or two other things, but I think that the SEC is definitely making great strides towards helping to deepen the market and to also bring it up to international standards, which is the most important thing, because we need to attract foreign investors.
And thanks a great deal for that. Bosley, you've got the rest of the headlines on the West African trade to deal with.
Yes, I think the biggest news for me, Temple and everyone, was that $3 billion that came from UNDP yesterday for the AfCFTA, and I think it's one big news that a number of media organizations, traditional media, missed on the continent, because this is the first chunk of money that the AfCFTA has secured since it started officially on the 1st of January 2021. So this partnership in cooperation between AfCFTA and UNDP at over a 3-year period, that's about $1 billion every year. That's a whole lot of money to support the AfCFTA. And I think this story should make the front pages of every news outlets on the continent, and saying thank you to UNDP, because the confidence that UNDP is bringing to the whole AfCFTA agreement and the United Nations as a whole is huge in support of Africa. And I just hope that the policymakers, the private sector, the political institutions across Africa will make the best use of this opportunity, because if we miss it or misuse it, or don't just get our acts together one way or the other, we may never just get it again in this century. Because who has $3 billion to give you during this pandemic, by the way? There's no free lunch anywhere anymore. So for UNDP to place $3 billion on the table, I think that's a very big story, and I say thank you to, so I personally, as a journalist, as an African, I say thank you to the UNDP for putting that $3 billion on the table in support of the AfCFTA. The warehousing story about SEC is good. The whole story is that we need to ramp up on our commodities, but just make sure that everybody behave themselves. So if you want to do warehouse receipts and you are providing warehousing in terms of brick and mortar facilities, you need to register. We need to do things legally. The whole idea is so that some folks don't buy some warehouse receipts and they want to take custody of the commodity, and they get to the warehouse and the commodity is empty. Or the warehouse is empty, you don't have commodities, by the way. So the SEC is now tightening the rules around commodities trading. I know Egypt is trying to set up a commodity exchange. Ivory Coast, Cote d'Ivoire is also working towards the same thing. Everybody in Africa is working towards commodity exchange. The collateral management company is also good. So the brick and mortar, the structure, the ecosystem is what the SEC is now working on one hand, while the central bank is also supporting the national commodity exchange in Abuja. And I think everybody is on the same track on that. I guess I'm correct on that.
you can't be less on that, though. So thanks a bit for those comments and analysis. Let's move on now to the Southern African space, where you've got Mr. Price getting the approval to buy power fashion food chain. South 32 pushes South African energy coal deal completion to the second quarter of 2021. Botswana, the diamonds, Botswana diamonds post operational loss of 195,000 pounds in 6 months to the December 2020 period. And Zimbabwe's crocodile breeder, Ndenga Holdings, warns of fall in full year profit. We'll find out if the crocodiles are the ones eating the profit or not. Zambia expected to continue talks with IMF today. Bosin, I'm coming back to you with these headlines across the Southern Africa space.
The conversation is with Zambia, continuing the talks with the IMF, which is good news. But again, Zambia has seen its fortunes not so has been dented a little bit with that default of the Eurobond coupon payment last year, which has been pushed to April this year. We all thought last year it was a long time, but it was a 6 months. Here we are. 6 months is here. By next month, on Thursday, we start the 1st of April. Then you have the second coupon payment, another payment to I think about 2 or 3 other investors or bondholders that were due. That was also defaulted towards the end of between February and March. So now you go back to the IMF, the whole Glencore story, the whole issue about the face-off between the authorities in Lusaka and some of the big names in copper production and mining had been one not so good story on Zambia's front desk. So for now, I think the country will have a lot to do. Edgar Lungu's administration will have a whole lot to do in terms of trying to win the confidence of everyone and keep Zambia on track. As far as the crocodiles are concerned in Zimbabwe, we all know that last year, folks were all laid back in terms of tourism. I'm sure they're making a whole lot because the sale of crocodiles to zoos, if you remember, if you know, in different parts of the world, they go to Zimbabwe as some of the markets to get some of these animals and take them to their zoos. You couldn't travel last year. It's a hard lockdown. Customers were not coming in. There were no visitors, almost at ground zero. So to that extent, I'm sure the crocodiles will have multiplied so much right now that I think the owners will start thinking of how to take care of them one way or the other, expand their whatever, but they will need sales because they can't let that market actually go down the drain. That's for that.
Thank you very much for that, Bosin. Joshua, let me quickly ask you if you have 1 minute to spend on the Zambian story as well. I mean, how much of a lesson has that constituted to sovereigns across Africa?
So, again, I think, okay, what I would say is that, I've said it before, the truth is that these international organizations have the upper hand in this situation when it comes to the African economies, because of the fact that if we want their help, if we want their aid, if we want the IMF to come to our aid, we would need to acquiesce to their demands. And the most important thing that they will always ask for is austerity, is public spending cuts, and rate increases and things like that. Now, obviously, the most important one also is the exchange rate, floating exchange rate, and having the free market, because overall and ultimately that's the agenda. Now, we could have saved ourselves a lot of hardship. Our inflation is skyrocketing and is likely to continue to go up as long as we are in a sort of a bubble and are unable to attract enough foreign direct investment and foreign portfolio investment. So our dollar reserves are going to continue to decline. Now, Zambia is a bit of a bigger warning because they went ahead to completely default. I don't think we're anywhere close to that situation yet. And I don't think it will be very unlikely that we'll get to that situation just
Right.
due to the robustness of our economy, really. But we will continue to struggle, and the road to recovery is a lot longer as long as we continue to take the more difficult path, and they will make it more difficult for us continuously, unfortunately.
Thank you very much for these comments, Joshua. I appreciate that. Let's now wrap up with our last lap of the show, and that's the Northern African markets, where Egypt's evergreen cargo ship freed from the blockade on the Suez Canal. You have Nile Pharmaceuticals reporting a pre-tax profits decline of 69.7 million Egyptian pounds for the July to February 2020-2021 calendar year. Morocco's foreign exchange reserves up by 23.8% year on year to 307.7 billion dirhams. HCP sees Morocco's inflation at relatively contained levels this year, and assurances Maghrebia is to integrate the TUNINDEX by April the 1st. That's coming tough. You got the floor for this, Ali.
Yes, I think the big news we can say in North Africa, and mostly in Africa and perhaps worldwide, this is on the Ever Given, we can say, ship. It was a big issue. So the Ever Given ship is a 400-meter long ship and is currently carrying more than 18,000 containers. So it's really a big ship. As of Sunday, there were roughly 370 ships stuck into the canal. So it's a lot of ships stuck into the canal. So we can say the solution came after 5 days only. So after 5 days, they unblock the ship, and now we can say the canal Suez is open. So Egyptian officials want to be, we can say, comfortable and to say to people, yes, the backlog of ships will be resolved in the coming 3 to 5 days. But experts believe that the effect on the global shipping could take weeks or even months. The worst thing, it damages the reliability and the reputation of the canal. You know, some ships have already left the region, preferring to take an alternative and longer route through the southern, we can say, through southern Africa, so through the Cap. So it's a big, we can say, damage for Egypt. You know that Egypt is really relying on few aspects. First, on the tourism. So the tourism has been, we can say, really impacted by the COVID-19. On the remittance, so the remittance has also been, we can say, impacted by the COVID-19, especially in the Gulf region, that you have a lot of Saudization, Emiratization, so you have less and less Egyptian able to send back to Egypt. And now you have the Canal Suez. So it's a really bad news for Egypt as a rentier economy, you know, because these four, or we can say these three aspects were quite, we can say, a comfortable way to have foreign exchange coming to the country. So these three, we can say these three pillars have been really stopped recently in the last year. So what is the good news for Egypt? This is that they want to, we can say, diversify more and more their economy. So they want to, we can say, to emphasize the private sector. So the market is going up. So they want to, we can say, to develop their market structure. They want to have a commodity market. So they are trying to push as much as possible to diversify the economy. So this is the state of the Egypt today. So we can say the natural pillars are really, we can say, damaged, but they want to diversify all the private sector. So this is the good news, in fact. On the Morocco, you have good news. So we can say that the inflation, we can say the inflation is currently maintained at, we can say, at a low level, and the foreign exchange reserve has been, we can say, has increased a lot, in fact. The bad news, this is that the inflation, on the inflation, Morocco import a lot of commodities, such as oil and food commodity. And as of today, as we say, these two commodities are going up, in fact. So the oil is going up and the food commodity is going up. So it can also damage the inflation rate for Morocco. So as of today, on the short term, we can say the inflation is mitigated. But on the long term, we can say we have a lot of ways that the inflation will increase a lot, in fact.
Thank you very much, Ali, for all of these comments and analysis on the Northern African market. I appreciate your insight on that. I mean, this has been the show for today. Thank you, Ali Segar of Segar Associates from Dubai. Joshua Debisi, you joined us from Vertebral Capital Management. Thanks a great deal for your presence. Bosun Omofaye, thank you so much for your editorial judgments on these headlines as well. I'm Temple Ashaju. Thank you for watching. I'll see you next time. Bye for now.